What's going on, ladies and gentlemen? Welcome back to another video here on my channel. Today we're going to be talking about the easiest way you can get involved in the stock market in 2018. This approach is going to be very simple. We're going to be talking about using Robinhood and looking at a fewer and safer investments or stocks that the beginner could invest in that are going to be a little bit less risky and they're going to be a lot less volatile. As a beginner getting in the stock market, you don't really want to complicate things, and if you're just getting involved to get your feet wet and experience what the stock market's all about and learn a little bit more about investing, you don't really want to go very high risk or jump into a market and go crazy if you don't really know what's going on. So I think the best approach in 2018 for the beginner to get involved in the stock market is, number one, you're going to need a stockbroker. The one that I would personally recommend, that I don't really like to recommend, but I have to, is Robinhood. Robinhood is going to be a great choice for a beginner to get involved with because it's a zero free trading commission broker, meaning you don't have to pay any money to use their broker or to execute trades on them. And then secondly, it's a really easy to use application. You can download it on your phone instantaneously from any app store, and you can set up an account really within a couple days and start trading once you have money deposited. Now, what I'm talking about for the average trader to use this for is to invest in actually good companies. Don't go out there, put money in it, and just start trading different stocks trying to make quick money if you don't really know how to do that. So you're trying to tell me I shouldn't invest in the stock that some random guy on StockTwits is telling me it's going to go to the moon, and then it's going to go to Pluto, and then it's going to exit the Milky Way galaxy. No, you shouldn't. That would be called day trading or even swing trading. If you're just getting started, you might want to take it slower and just invest a little bit of money into good companies, what we call blue chip companies. This way you can have some reassurance that at least your money has been invested into stocks that are actually reliable and have a good proven track record. So first thing is getting a brokerage company in which you can use to execute those trades, which I would have to recommend Robinhood in this video because they are very popular, very well known. A lot of people use them, and it's absolutely free to execute any trades or invest in any companies using that broker. Oh wait, free commission trading broker? Something's gotta be fishy there, right? No, it's true. Robinhood does have zero free commission trading, but you will hear out there from many people that Robinhood is rigged and Robinhood's a scam and Robinhood stole my money and they executed my order at the wrong price, which I won't lie, that has happened to many people, even myself. In relation to Robinhood, it's probably not your best broker to day trade or even make fast execution trades, meaning you're getting in and getting out of a position very quickly. But again, this video is aimed at investing. So if you're going to be investing, why not take the free approach from Robinhood? And then number two is to smash the like button. Is make sure you are investing into blue chip stocks. Blue chip stocks are what we call the most reliable, or stocks that have had a very long track record where they have proven reliability, they have proven they can stay in business, they can turn positive cash flow. They are good companies to invest in that have, been through the worst and they've been through the good, and they manage to stay afloat and stay a strong business. That is what we classify blue chip stocks as. To name a few off the top of my head, you could think of McDonald's, Microsoft. Those are just two. There are many out there, okay? So do a little bit of research on blue chip stocks. Now, blue chip stocks are the way you'd probably want to go if you're just starting out because, again, they're reliable. They can tend to be a little less volatile. And again, another great thing about nice companies like these, a lot of times they'll pay dividends. A dividend is where the company will actually pay you money to own shares in their company. So again, if you're just starting to get into the market and you invest some money into a couple of these companies, blue chips, little reliable, less volatile, and they pay out dividends, you're gonna make money just for owning their actual stock. It's a thank you to the investor for owning shares in their company, and it's paid out in the terms of what's called a dividend. And again, you can build a portfolio based around safe, reliable stocks that pay dividends, and then over time you just keep growing it and growing it and growing it, and you can grow up a good amount of shares to the point where you're actually making a decent payout every time they pay you dividends. So as number 2, invest in safe, reliable companies that also pay dividends, especially when you're just getting started. Number 3, this is an additional tip that I would give to the average beginning investor. Don't put all your eggs in one basket. We've heard of this term many times. You've heard it, I've heard it, everybody's heard it, but don't put all your eggs in one basket. Now, this might be confusing or hard to determine when you're just starting out and you're starting to buy up stocks, and you may not know whether or not they're in the same sector, and that would all be confusing talk for you. But to keep it simple is you want to diversify your portfolio if you are going to be investing in building up somewhat of a portfolio of around, maybe 5 or 10 different stocks that you're holding at one time. You would want to make sure that it's diversified. You wouldn't want to have too many of the same companies or own too many shares in the same in companies that revolve around the same business model and are attacking the same market, essentially. Because if you invest all your money into, let's say, a couple companies that all do the same thing, what if sales for that particular market drop 1 month or for a 2-month period, and those particular stocks all take a hit? Your whole portfolio will be taking a hit and you'll be losing money. But if you had a portfolio that had maybe one stock in that particular market and you owned a few other companies in different particular markets, while one of them's doing bad, the other couple stocks could be doing good, and that will help balance out and maybe help wash out any of the loss you might acquire from one of the bad stocks in that bunch. So again, keeping diversified can help you kind of manage some of your risk within the market. Now again, you can learn a whole lot more about different portfolio buildings, and I will even make more videos going over that specific topic. But those are really the 3 quick, simple tips that I would give to any new investor and new trader that's really trying to get into the market and get their feet wet with investing in a company or investing in, trying to trade within the stock market. Those are the 3 tips. Use Robinhood as your broker. Number 2, try and stick to blue chip stocks. And then number 3, try and keep your portfolio somewhat diversified so you don't have too much risk out there in the market in one particular area of the market or one particular sector. So thank you guys again for tuning in. Please do give me a thumbs up, a like, share, and subscribe before you head out the door. And I'll see you guys on the next video. Take care.